Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, amazing people all over the world of crypto and blockchain. And today I have another amazing guest. From what I understand, he's coming to me live from Denver, where they have the ETH Denver festivities. His name is Karan Sirdesai. He's the CEO and co-founder of Mira Network. Karan, welcome.
Thanks for having me, Jamil. Always a
Very,
pleasure.
you're very welcome. Thank you for joining me and taking time out of your schedule to join us. So,
Yeah, busy week this week in Denver.
oh yeah, absolutely. And I want to probably get into a little bit of it a little bit later. I want to start out with the first question I ask everybody is, what is your background, and is it a logical background for what you're doing now?
Actually, not at all, right? My major in college was actually accounting, if you can imagine. But life took some mysterious turns, and I ended up the founder of a decentralized AI company. But I can maybe talk a little bit to that, right? Like a lot of my life has been like the path less traveled. So, when I was studying accounting a few years ago, I was like really interested in like just how systems worked, what was like keeping these systems like completely on check, the risk and failure points and a bunch of these things. And that kind of led me to blockchain in the early days. The idea of having like self-sovereign money and what can really be like a defining accounting ledger for the world, right? That's what a blockchain effectively is, if you think about it. So, in that context, I quickly realized that those markets are really inefficient, and I taught myself how to code. So I was like pretty decent at it. So I'm like, okay, there's like a lot of like inefficiencies in this market. I can use like a few lines of code to arbitrage and make like a bunch of money. So that's how I really got started in like 2017. In that wave, built a bunch of R bots, made some money, lost a lot of it as the market came down. But I kind of really continued to be interested in the tech. I felt like, there was something there which is definitive. And one thing I truly believe is if you see a wave in the world, you ride it, because waves come very rarely. So I'm like, okay, this is a wave. This is moving to a direction where, it's going to have like either global adoption or nothing. There's no like in between where it's going to be like a niche category, right? Blockchain is going to be like either everywhere or nowhere. So I said it's a good bet to take, continue to stay on. In that process, just cold DM'd everyone I could on Twitter as like a random kid, and somehow managed to, work with Balaji Srinivasan on some really cool projects, specifically on blockchain and the government space and stuff. And then, ended up joining Accel, which is like a, $100 billion global venture fund specific to lead their crypto practice. And there ended up deploying over $150 million across seed to Series D checks in like some really defining companies, whether it was FalconX, Nansen, Polygon, and a bunch of others. And sometime, in 2023, I felt like now's the time to go back to being a builder. I felt like AI, just like how I felt about crypto back in the day, I felt like AI is one more big definitive wave. And there is either going to be like the ubiquitous AI in the world, or there's going to be like no real like impact on AI. There's no in between. And I personally felt that crypto really created the values and the monetization systems that allowed for open source to thrive. And whenever there's a new platform that comes into the picture, you either have the open source world and the closed source world, right? And I truly believe that we now have the tools and the resources to make open source competitive, almost like big tech. And that's where crypto plays like a really big part. So that's like the long-winded answer of how I ended up here.
I agree with you. That it is time to build the AI. I've seen everywhere I look, AI is being built. So, Mira Network, what's it all about, and what's your focus and your vision for the network?
Yeah, so I'll tell you, if I'm being really honest, a lot of people will come to you and say that I had this epiphany or dream that, this is what I want to do in life. I'm going to be very honest and say that I have no, greater person looking over my shoulder telling me that this is your calling. How we got here is very experimentative. We felt like there is a direction of decentralized infrastructure to be built for AI, but we didn't really have a sense of what that looks like and what's going to be the valuable piece of it. And you see that right now, right? You have people building decentralized models, there's decentralized inference, decentralized data, there's a bunch of different pieces. What we did is we said the only thing we can do right now is get our hands dirty. So we just went and started building. We built things all the way from the GPU till the consumer. So like consumer apps, build them, scale them. Many of them broke, some of them did well. But we kept kind of coming into this, like running into the same problems. And the big problem we kept running into was that, so AI is interestingly a net new paradigm in software. Historically, for the last 30, 40 years, software has always been an if-then function. That means that if you have a particular input, you have a very definitive output that you can predict. AI is the first thing that changes that paradigm altogether, where you cannot predict the next output because by design it's probabilistic. There's a probability assigned to what the output is going to be. And that's what makes LLM so powerful, right? That's what makes them creative. That's what gives them emergent behaviors. But the risk to that is that they also make a lot of mistakes. And historically, all software we've built has not been designed for software that makes mistakes. The developer can make mistakes, but the software never itself makes mistakes, right? So what ended up happening is, while our AI performed brilliantly like 80% of the time, 20% of the time, it just absolutely failed. Like it was terrible at what it did. And the thing we need to realize is as these AI tools get more and more entrenched in our lives, right? I personally must be using ChatGPT at least 50 times a day now. And it's replaced almost every other big application front end for me. That even a 1% error, 2% error can have a really meaningful tail risk. Like I recently wrote a piece for Cointelegraph on like safety in DeFi, like the AI version of DeFi, DeFAI. And the big issue there is, the AI bot, you give it $100,000. It may perform incredibly well 99% of the time. But 1% of the time, it might make a stupid mistake and like send money to a contract where you can't get money out of. Right. So even if you made like, 50% return year over year, you're beating everyone, the risk of that 1% happening is so high that no one wants to take that risk. And that's like the biggest limitation in AI today. That how do you go from, this great AI that makes mistakes to something that makes such less mistakes that you're comfortable using it in like high consequence use cases. So that's where that was our bottleneck personally as users. So we said, this is a big enough problem to solve. So what we designed over the course of the last year is a new, LLM communication system or protocol that allows AI models to work with each other to minimize hallucination and bias. How it works is very simple. You have one model that creates the output. So for example, you want to create a Twitter thread on your podcast, right? So you maybe put the input of your podcast transcript, and then one model will create the output. But this output might have errors, right? It might say something that actually wasn't in your podcast, or it might omit something that was. So what it does is this model then communicates with other models and says, this is the output, guys. Is this correct? And all the other models independently arrive at consensus on whether that was correct or not in the context of your input. So if you think about it, like it's almost designed like a blockchain, right? So what's a blockchain is the same thing. It's a transaction that actually has to get validated by a distributed set of nodes. Just here, the transaction is an AI inference or AI request, and that's getting validated by a distributed set of models, which is why, naturally we felt like the blockchain design is the most ideal and the most like high trust for the system that we're building. So that's like the, elevator pitch, I'd say, of what we're doing and why it matters.
Interesting. Yeah, I do convert my, it might be a couple of years, 2, 3 years down the road, I do convert my podcast into books. And when I run it through the AI, it's often very, very different than what my guests have said, and I have to go through it manually. So having a blockchain approach where you have consensus in multiple platforms, that's a really good idea from my perspective. So yeah, I want to find out. You termed DEF AI, right? I want to find out what DeFAI, I guess you already explained it, was all about, how it differs from DeFi, DePIN, and now it's the next level of architecture.
Yeah, sure. So DeFAI, or like let's just call it like AI DeFi for now, right? Just so that we don't keep like confusing the two. So AI DeFi is just another manifestation of what DeFi is. So DeFi, if you think about it, is it's just a set of primitives that allow for capital flow, right? Capital flow includes trading, which creates volume, lending, borrowing, leverage, which are all basically just tools for you to deploy and use your capital efficiently. And that forms the basis of like this trillion-dollar economy that we have in like DeFi, right? Today, majority of DeFi transactions are run by, I'd say, either humans or human controlled bots. These are like just rule-based systems that are like traditional machine learning models and nothing that new. My sense is in the next, 3 years or even lesser, the way things are going, majority of transactions are going to be autonomous agents, right? So when we talk about AI DeFi, it's the manifestation of DeFi where most transactions or activity in the DeFi world, whether it's volume, whether it's TVL, is actually going to be controlled by autonomous agents and not humans. Why? Multiple reasons, right? One, autonomous agents are extremely high throughput. That means that they don't have to trade at human speed. They can trade infinitely with each other. So they can squeeze out every single like basis point of margin, right? Versus having a human constantly enter the trades. Second is they operate 24/7 without oversight, right? You can just run an agent. Even if it's like 3 a.m. in the morning, you'll execute the trade while you're asleep, right? And third is, which is what people, I think believe so, but is not true, is they don't make mistakes. Human error is like a big thing. Human judgment. Oftentimes humans just get clouded by their own judgment, right? Where they're like, okay, this is a big sum. This is not a risk I should take, even though like the risk is actually very calculated and is worth taking. While, AI bots are effectively have zero emotion. They will take that risk, take that bet and make that money if you won't, right? So in that context, I believe that, it's just DeFi is going to be how AI DeFi is going to be how human traders scale. The best traders can just deploy like 50,000 versions of themselves to execute capital in different ways versus having to kind of wait on like hiring a bunch of people and stuff like that. How does it differ from like DeFi itself? Is it's actually just an interaction layer. It's going to be like, think of it like how, Robinhood is like a consumer interaction layer with the banking system. AI DeFi is going to be how a lot of people in the future just interact with DeFi. Instead of going and clicking on Uniswap, they'll just like, find a chat agent, they'll connect their wallet and they'll tell the agent, I want to earn 15% yield with this risk curve. And the agent will just figure it out for itself. So it just creates this higher level abstraction for users, which is great because I'd say the biggest bottleneck in DeFi today is just the friction of use. It's so hard to use these things and so hard to kind of get a hold of these things. If you can just have like simple interfaces, you're basically expanding the TAM for this by like 10x from where it is. How does this really differ from Deepen? I'd say Deepen is the underlying infrastructure layer that supports a lot of these agents, right? So what is an AI agent is basically a set of three things. It's a set of instructions, which are called prompts. It's four things: instructions, models, compute, and data. Models are basically just pieces of like, pieces of code that you can store anywhere. Instructions are something you would write to kind of instruct the AI. Compute and data are resources that exist in the real world. These are like physical resources, right? For data, you need hard drives. For compute, you need GPUs. And right now, most of these things are owned by centralized entities. What Deepen does is basically allows you to aggregate these resources in a decentralized way in the real world. That's why they call it decentralized physical infrastructure networks, right? PIN, the physical part is really important there. And if you can like actually aggregate this and hit a critical mass, you kind of achieve like meaningful network effects that you can kind of then go compete with like larger players like, cloud operators and stuff like that. So I'd say these are like the three differences.
Awesome. Awesome. So I'm thinking about traders. I'm thinking about that, agents would be great for traders, but they don't really, but for investors, the investors have, like intuition. How do you build in intuition into these agents?
I think that's a good question, right? I think this is how I think about it. I think intuition doesn't go away. Like we call it alpha, right? In the trader world. Like every trader has their alpha, and that can be different vectors. Like it can be you are really good at long-term thinking. You are really good at betting with size. Betting with size means that if you like really believe in something, you will put like all your money behind it, which is very counterintuitive to trading, right? Something might be you're really good with like systems design, so you can really build like arbitrage systems and stuff like that, which are much better. And the last can be, maybe you're just like a very you're just very good at picking assets, for example. So it's like edge or alpha is often like just multivariable in terms of how you think about it. Which is why, till now, machine learning models didn't have edge because edge had to be hard coded by the creator. So if I'm a really good, trader and I believe in something which I think is my skill set, I would code that into a model and then the model would scale from there, right? So it would just make like 1,000 replicas of me. I think the interesting part about the current version of AI, which is LLMs, is the idea of emergent behavior, which means that these LLMs, figure things out or even think about things that are beyond their instruction set or beyond their scope. And why this is super important is because the only way you can create alpha is through emergent behavior. You have to think different. You have to think unique. So we haven't really seen too many instances of this yet, but as AI gets more sophisticated, I do believe you will have these two camps. You'll have one camp which is basically scaling human intuition, which is basically I have this edge as a trader. I need 10,000 versions of me to trade this and deploy this capital in different ways. That's one version of AI. Second version of AI is basically what we call unsupervised learning AI, right? Basically, AI makes its own mistakes and by trial and error figures things out for itself. In that case, the AI might develop an intuition which might be very different from mine. It may be better, it may be worse, but it can just be like an emergent capability. So in that sense, I do believe AI is going to be used there almost like a top of the funnel, saying that you take like $10,000, go play around with it. If you find something great, and we think it's useful, we will actually then go and deploy like $1 million into it. So this is how I think like AI is going to be used over the next, 2 to 3 years at least.
So what as you fuse DeFi and AI, right? What else is possible because of it?
I think markets become extremely efficient. That's the first thing. Like right now, assuming like you see transactions go through every, let's say 100 transactions go through every second, you suddenly see that scaling to 10,000 because now there's infinite resources, right? You can just deploy 1 million bots and they can keep trading on your behalf. So what that does is like the immediate defining effect of this is block space becomes more scarce. Right now, most money in crypto, interestingly, is actually made at the block space layer, which is called MEV. Can you front run transactions and extract profit before someone else can execute? And what this means is that people are willing to pay a lot of money for that block space. I think that business continues to become the most defining business in crypto because you will see so much money being pushed through these AI bots into like buying block space early that the kind of cost for block space, because block space, think of it like oil, right? It's a scarce resource. There's only that many transactions in the block. So that's going to be like significantly more valuable than it is today. The second, I'd say, more optimistic view for me is DeFi is like really, really bottlenecked on like poor UX and poor infrastructure. I think the AI manifestation of DeFi becomes the first layer of unlocking that because AI as a system is smart enough to kind of figure out the intricacies. The problem there is, like I discussed earlier, is AI is still not good enough to do that because it might do 99% of the things well, but if it clicks on a malicious transaction, then all your money is lost, right? So I think as we build those systems to kind of protect against that, we can onboard the next 3 to 5 billion users, onto DeFi. For example, I know for a fact today that there are pools, let's say on Ethena, that are giving me like 20% yield in USD. Everybody in the world, any country, any person, if you tell them I'm giving you 20% US dollar yield, they will drop everything and go and put money there. They don't know, they can't do it today because they don't know how. But if I just give them a chat app on their phone and say, you just chat with this and it'll deploy like $10,000 for you, I don't see a reason why people won't do it. So I think that's the most exciting thing about like AI and 25.
You brought up two interesting comments I want to follow up on. The first is reliability, right? How do you define or redefine AI reliability and what actually does it mean to be reliable in the first place?
Yeah, that's a good question. I think reliability is it's a multifaceted metric. Like think, what does a human mean to be reliable? Right? The different definitions for what reliability means. I think in the AI world, reliability falls into three buckets. There is accuracy, there is precision, and there is quality. Let me walk you through all three of them. Accuracy is basically just how accurate are you, right? How in line are you with, let's say, global truth? So, for example, if I ask ChatGPT today, who's the president of the United States and it says Joe Biden, then ChatGPT is not accurate. It's like a binary answer. Second is precision. Precision is an interesting one because precision is, not all truths are global. Truths are often local, which is like connected to a particular source of truth. So what precision does is it tracks how accurate is a model to a particular source of truth. A good example of this is like none of the Chinese models talk about Tiananmen Square because in China, Tiananmen Square doesn't exist effectively, right? That's a very precise model for its objective of like, catering to Chinese users. And the third one is quality, which is the tricky one because quality is completely subjective. Like beauty is in the eye of the beholder, right? Like what you think is great, I may think it's terrible and vice versa. So quality is usually defined by, whoever's using the model. So in defining quality, we use this thing called benchmarks in AI. Benchmarks are basically a good example is going back to your idea of like, using your podcast for Twitter threads. You might have a great idea of, what a good Twitter thread is from a podcaster. So you might pick like 5 of your favorite podcasters, take your favorite tweets out of them, and that becomes your benchmark. And then you compare to the AI's output to saying, is this as good as this particular benchmark? So these are like the combination of these three things in different contexts is what we define as reliability. So if an AI is not accurate, is not precise, or does not deliver great quality, we call it to be like unreliable.
I'm interested to see, the crypto market tanked over the past week and a half. There's a couple reasons for that, but like I'm interested to see what the AI thought of the prices would go to if they would keep going down or if they would bounce back up. What kind of reliability you would think about what happened? I don't know. So
Yeah, I mean, this is a good example, right? So we have customers already in production. We actually announced one today called Gigabrain, who basically run intelligence systems on top of crypto. And we've seen over the course of the last 3 months, the percentage profitable trades, that means the percentage of trades executed that are actually profitable, has gone from like 16% when they started to like 65% today. So AI is definitely getting more and more reliable, even in crypto.
um, another thing that happened because that caused the market to go down was Bybit. And I know that you're at ETH Denver, and I'm thinking I'm not there, but it must be a topic of conversation, right? What's the consensus on as far as what's going on with Ethereum and the Bybit in ETH Denver?
Yeah, I mean, I feel like it could have been really, really bad. We've seen hacks much smaller than this that have caused the market to completely lose momentum. I think I have to give props to like Ben and the Bybit team to like just manage that crisis incredibly well. What Bybit does have is like people underestimate this, but like exchanges make a lot of money. Like 1.5 billion is rough, but it's not like, life changing for Bybit. It's enough that they can kind of control the whole and just ensuring that withdrawals went through and the exchange wasn't like under attack was very important from a trust perspective, at least that the team kind of maintained it. I think from a security perspective it's extremely scary because I don't know if you saw the latest today, but like an independent auditor confirmed that the security error was not at Bybit's end. So everyone thought like Bybit signed the wrong transaction, but actually the security error was there was a phishing attack done on Safe, and then the hackers were able to change the front end through Safe system, like through Gnosis systems, and then attack Bybit. And not just like Bybit signing a wrong transaction. But what this means is that they can do this to anybody else because now they have like nobody is safe as like Safe wallet is like secure anymore. So I think that's what people are worried about. Like we internally have now set out directions that no one will use the Safe front end. We will all use a different front end from Safe because the risk of signing a malicious transaction is like way too easy. So, there are like trillions of dollars being secured through these systems that we still don't understand very well. And I think, there's just going to be a lot more hacks as these bad actors get more and more sophisticated.
Wow. So then we really need to be able to find something we can trust, right? So we're looking to AI, right? How do you build trust into AI, and how do you embark upon tackling these, trustless, I guess I call them challenges, um, in the AI infrastructure?
Yeah, I think that's an important question, right? And people don't understand why and how that is important. Because like trust in AI, what does that really mean? Like historically in the software world, we've never really had to worry much about trust because, software itself was like, there were like systems and controls around it, historically that, you still end up trusting like a Google, or you trust the legal system of the United States to make things like work in your way. But I think with AI, it's different because AI is just inherently so uncontrollable that people don't even understand what they're paying for. So for a good, I'll ask you a good question, right? Tomorrow you're using ChatGPT and you're paying them, let's say, $50 a month for ChatGPT. But OpenAI decides that instead of just giving you the GPT 4.0 front end, which is their latest model, they're going to be like, Jamil is not like a super, sophisticated user. We'll just give him the GPT 3 front end and he won't know the difference. Right? And there's no way for you to prove as a user that, this is not the model that I paid for. Similarly, let's say you use AI to, do health diagnosis and you give it a bunch of reports and it says, let's say cancer or no cancer. What makes the provider what makes the provider just, arbitrarily say cancer or no cancer for every input it gets? There's no way for you to prove it. If you have to do the audit all over again, you will have to use a human. So then why are you using the AI in the first place? So I think these are the key risks that come in, right? Like, how do you know you're getting what you're paying for? And this gets harder as you scale. Because as you scale, there'll be like millions of these models, billions of users. How do you really constantly manage to know that, of these 10,000 models, these two are actually false? And I think what crypto has done really well, especially with the advent of proof of stake, is to be able to design and enshrine trust assumptions at the lowest common denominator. Because the same issue arrives, when you're confirming a block is this transaction valid or invalid? And you actually have, stake, which is like people staking assets with you with the risk of loss in case they're malicious to be able to protect against that. So I think that's where, using the principles that we've kind of built out in crypto over time and applying them to this new world of AI is going to be super interesting, and which is where we spend a lot of our time.
So what do you see as a horizon for the rest of this year as far as AI, as far as DeFi, depend, as far as AI DeFi? What do you see coming down the pike for the rest of the year?
Yeah, I think the big thing is we've seen what, like with the first wave of agents, we saw like there was the first glimpse into what's possible with AI. Like a lot of them were like rubbish. They were just like LLM wrappers around ChatGPT, but they at least showed the public of what these agents are capable of, right? Like I remember when I saw like Zeribro or Eliza for the first time, I'm like, holy shit, this is the future, right? But I think that's where it stopped because at that point we were like these systems were not good enough. I think the big theme this year will just be better infrastructure to build better agents. Right? How do you get agents to trade? How do you get them more reliable? How do you get them to use different tools? How do you get them to be multi-platform? How do you get them to think and reason? All these things are going to kind of become important in the forefront. And as these systems and agents get better and better, you just start seeing more and more unlocks on the application side. For example, right now, like we're seeing DeFi getting attention. Why? Because more agents are good enough to trade, right? You'll see DeFi agents getting good enough to do MEV. You'll see agents getting good enough to do marketing. You'll see agents getting good enough to even be able to kind of build protocols and design protocols on their own, right? So I think that's what we're going to see in the future. I would not be surprised if there's a net new primitive by the end of the year that's completely designed by an AI.
Wow. Well, we have to have a follow up early next year. You and I have to talk again. So this has been great. I want to thank you very much for taking the time out of your schedule talking to me. I learned a lot today. It was great. I have one last question. How can people find out more information about you, about Mira Network? How can they start to use your protocol platform? How can they do that?
Yep. So you can find us on Twitter at Mira_network. Um, so you can get started. Anybody who wants to get involved in Mira, you can get started immediately by using our first consumer app, which is called Clock, KLOK. So this is like a chat GPT style chat front end, which has our entire infrastructure on the back end. And you also earn points and rewards by using the application. So I, for example, just replaced ChatGPT with Clock and I use it every day as my daily driver. And we have over 500,000 users that do so as well. So anyone who wants to get involved can kind of just use Clock, find us on Mira_network and, reach out to me wherever you want.
That is wonderful. Awesome. Um, yeah. Thank you very much for your time today.
Thank you, Jamil. Thanks for having me.